Okay, so where we are last time? I heard on the Discord that who was it who have the problem with finding the way in the market whenever it's trending or not?
I think I was.
Yeah, I think it was you. Good. Okay, let's so let's talk about it. Let's focus about it. And I couldn't emphasize more the um, why it is so important to find a way in the market before you even start trading. Like a pre-plan. I think we started a little last time. But basically, before I even start placing a trade, we are right now to make some some rules which you will be following, guys, like over your trading. So whenever you start trading, you really need to. You have my screen, yes?
Yeah.
Okay. So you need to find wherever you are, wherever you are with the market. So either the trend or the consolidation. And the easiest way, Adrian, is basically if you see two consecutive higher highs and higher lows, it will be an uptrend. If it is two consecutive lower lows and lower highs, it will be in a downtrend. So this is the easiest way to identify a trend. And I already posted a short video about how to do it on the Teachable, so you guys have an access to it. The easiest way to do so is just hunt for those highs and lows and always try to define wherever you are. I'm not treating them as a solid support or resistance. You know, I really hate diagonals when it comes to trading because I don't trust them a bit. But I do use them for defining the situation in the market. So if I'm in a trend, if I'm in a consolidation, and you can do it on the shorter term trends. So if you want to really use some trending strategy, you want to see if you are in a trend, or you can focus on higher term trends and then stick to them. So as you can see, we can go through it all over the place. It's really easy way. And whenever you were in a trend or you are in a trend, until it breaks, it's your friend. So you should be trading it, trading with the direction of the general trend. And we know that the market is basically moving in two ways. It's either consolidating or it's trending. When it's consolidating, you need at least two touches on the top horizontal and the bottom horizontal, or it will be a consolidation. Like you can chart it also this way. It will be like it will be triangle type consolidation. So it's whatever you will choose in your trading. You want to always find your way where you are with the trend. So as you can see, like I always try whenever I start. It's basically done on Monday mornings. I try to find what is going on with the chart I'm looking at, and what is the history of the price, what happened, what can I expect. I do it first by defining a trend which I'm in, and right now we were on Euro USD for a while. We had a really nice uptrend after a break of this consolidation. And if somebody is interested, yes, you can do measure moves on Forex, and it worked pretty well, as you can see, up to the week. We were in a trend. As soon as we made this low, we broke the bottom trend line. I will make it more accurate, okay? As soon as we broke it, you can expect market at least to consolidate. So if you don't know how to do it, the best way is to mark the local low as a bottom of the general range and local top as a bottom of the as the top of the range. And whenever the price action will break, will close, at least close, and probably I would like to have a follow through above here or below here, it will define a new trend, because then you will be able to trade it accordingly. So if you are afraid of trading consolidations and you want to trade only trending strategy, it's best to wait until it is broken, one of those two zones. You can also, if you are trading lower time frames, I'm using right now 4 hour, you can see that even this consolidation is kind of a downtrend. And you can see we have a series of lower lows, we have a series of lower highs, and right now it is still not broken, okay? And the general idea for myself would be to trade between this top trend line and this bottom support, or you can narrow the the range, as we probably spoke last time, and make something like this out of it, and then we can use fibs. So the best way, Adrian, to define a trend is to look for local highs and local lows. And it's really like if you see a series of at least 2 higher highs and higher lows, you can assume that you are in an uptrend. And you have to stick to it until it gets broken. So until it provides at least one lower high. And we have first lower high provided here. Okay, so we know the previous trend is broken and we are waiting for the resolution. Trends almost never, sometimes it happens really fast, don't reverse like here, don't reverse in one move. And you have plenty of time to see if it was broken. Like with this situation, as you can see, even in this uptrend here, even if we made lows, they were always higher than each other. You can see it on the chart. And whenever this trend, don't worry about the top line. I'm just using the this line to define a trend. When it was broken, you set a new lower low, higher low, and then there was a trade to be made on the retest, and then we had a change of behavior, and you could really easy trade it to the downside. So does it satisfy your question? Like,
Yes, it does. I guess it. I need more practice to recognize them faster.
yeah,
Because the knowledge is there, you know, a lot of it, but
it is.
I need to practice a lot.
Mm-hmm. The best practice will
even about a lot of stuff like the range. You know, when
mm-hmm.
when you printed the range, I just heard the crown saying, "I'm not taking trade in the middle of the range."
Yeah,
Yeah.
the middle of the range is total nonsense. Of course, if there is a range, like we had here, you can make fibs out of it. However you will make them, and you can see they are respected. So you can always scalp the smaller ranges, like between major fibs. It is also tradable. But basically, the best way to trade a range is wait for the price to touch the support and then trade it to the upside if your general bias is to the upside, and if your general bias is to the downside, it's better to stick to your bias and trade it to the downside until you are proven wrong. So with this range, probably at the beginning, whenever it was formed, I would be trading it to the downside all the time until I would be kicked out of my last short or didn't close it here, and then I would enter on retest because it was a clear break of the range, try to come back, retest, and here we go. The best exercise for you is also look at the 200 EMA. So whenever you have price action above 200 EMA and 200 EMA is going up, you are probably uptrending. Whenever you are below the 200 EMA with the price action and it's sloping down, you are downtrending and you want to stick to the downside trades. If you see a picture like this, you're probably consolidating because the price cannot decide wherever it is going. And also in consolidation, you can trade from the middle of the range to the top. You can trade using the EMA, but never hold your trades above the range resistance or the support. And right now, what I'm waiting with this is a resolution on the hourly and 4-hour, and for Euro USD to select a direction. And as you can see, this range is maturing, but still not mature enough. And I think we will spend at least like a week here until we go somewhere else. So this is my personal guess. And the best exercise for you guys, it will be what I will ask for you starting next week. It's like to sit over the weekend and select a trading pair or two which you want to trade over the next one. And check and provide some analysis out of it, okay? Just simple one, define the main structure of the market, main ranges, if it is uptrending or downtrending, and what are you planning to do with it? So what will be your actions to be taken on it, okay?
Yeah.
Sounds fair? Faisal, how are you?
Okay, okay.
Yeah, okay.
Yeah.
So you said you had like somebody said, I'm sorry, I still don't recognize you by the nicknames.
I'm Skipper.
Yeah, Skipper. Skipper, I know. Vredefort, is it you, Adrian, or it's
Dodi. Yeah, I forgot to change my name.
Yeah, you're Dodi. Okay, yeah. And okay, so so Vredefort will be Gabriel. Okay, Satoshi-san, Stan, I already remember. So there was a lot of cry. I can't find it.
Probably.
I found where it was you. So you can't make money. Yeah. So you're in the loser zone. Was it you?
No, I was saying that. Well, it's same thing as last week that we spoke about, because I think that's my major thing, because I have an edge, right?
Yeah.
But sometimes I question it. So when I look at the market, I'm not sure exactly if that's an enter, or I'm just, my emotion or the market just seduce me to go there. And because my edge is not precise, it's hard, it's struggle. And I'm trying to figure that out. But well, what I have is, I told you about it in the Discord. So I have the horizontal scalp in the voodoo horizontal. So when a candle close above the line, I'm enter. But I don't follow all the. So I just look for a signal, then I filter it on my biases of the market. Sometimes it works, sometimes, but it's really kind of hard. So I'm not exactly sure. Sometimes I can tell, but most of the time, or maybe other times, it's really not. I can't tell if that's an entry or just me want to enter trade. Okay. You know what I mean? So
yeah, I get you. I get you really
not
clear.
Precise.
So why do you question your edge?
I'm not questioning my edge. I will follow my edge precisely. I just don't know if that's a signal or not, because I know if I follow it, it will make money. Like, I know that. Okay. I did it before. But the problem is, when I have a signal, I don't know if it's an entry or not. Sometimes it look like it. Sometimes I look to the stochastic or any momentum other oscillator. I only look to stochastic and RSI. And they look weak, so I think maybe not, maybe yes. It's questioning thing. When I enter, I don't look at anything. I just stick to my rules, and I can watch myself and see my emotion tell me, oh, get out, or like you should. It's gonna be a loss, but I don't do anything. I just look at the chart and I see if it's gonna hit my take profit or my stop loss. So I don't have problem managing the trade. I have problem deciding whether entering or not.
So you don't have a mastered edge, in my opinion. I mean, you don't have as precise. So you were asking me last time why it has to be precise, and always the edge, your strategy needs to be precise. I mean, you can switch between strategies. So let me explain. You will have different type of trading if you want to trade. the consolidation, okay? So you will behave differently and you will probably use the different strategy, and you will work on a different strategy when it comes to trending.
I understand that.
Okay, so
can I just say
yes,
one
go
thing?
on.
Well, first, I'm scalping 15 minutes, so it's kind of doesn't matter if it's trending or not. It's I mean, it does, but we mostly like it doesn't matter because I follow a strategy that, like I told you, that horizontal one.
Mm-hmm.
But you said last week you have your strategy, then you have your biases, and you filter one with the other. So you just pick the trades that first go with your strategy and follow your biases about the market. So you only take longs when it's going up and only take shorts when it's going down.
Mm-hmm.
And that's it's kind of easy to speak about it. Like obviously you only long when it's go up and you only short when it's going down. But when you sit in front of the screen, you question that. You're like, is it going up? Is it going down? Like I don't know. I understand that
You never
sometimes.
know. Listen, skipper.
Yeah.
You never know if it will go up or down. Never. Nobody knows. Okay.
I do. I know
And you
that.
have to accept it like as a truth. So whenever you hesitate, whatever the price action will do, you have to stop thinking about what the price action will do. You can only think about what it did and what it probably means, because the technical analysis is based on the past. Okay.
That's what I need to know.
We believe that the market tends to repeat itself, its behavior over and over again. Of course, it's not one-to-one repetitive, but we can see for sure that market moves in trends or in ranges, okay? And this is also certain way of repeating the behavior. So whenever the market starts ranging, you can already assume that it will most likely not break this range sooner than 30% since the end of the formation. Okay, if you have like a triangle-ish. If you want to go by volume, you can know that the volume will be falling over the market, being in range, and it likes to break out near the major of the range. So we can assume with this volume we still have time, at least 1 or 2 weeks, until this range will be broken. But this is only an assumption based on the past. Trying to figure out what the market will do, it's pointless because you can never figure out. The only way to make money with the market is applying a certain strategy based on the general current and past market behavior. So if you are in the uptrend, like here, and you said scalping 15 minutes and 5 minutes, it's not worth looking at the trend. I mean, depends on the strategy, but basically, even in consolidation or even in trend, the general uptrend, there are shorter term trends. So if I'm scalping 15 minutes, I will pay attention to the hourly. If I'm scalping 5 minutes, I will pay attention to the 15-minute trend if I'm in a trend or in the range. And I will also pay an attention because we know when market starts trending, you have to assume that this trend will never end. And this is why the saying was made, you know, like the trend is your friend and you need to follow it until the end. And you have to assume that the future will be the same as the present and make your decisions accordingly. And you have to assume, and I would even long here, let's say, even if I get wrecked on this trade, but I have to assume that this trend will continue. If it will stop continuing, it will show me on the chart that it stopped continuing, as it is here, really clear indication that now I should forget about going with the uptrend, the general one, and wait for either a reversal or consolidation, and after consolidation it will continue the trend. So I need to assume that the future will not change, but also this is the difference, because you have to assume but not expect a trend to continue. You should like forget your expectation and just trade with what you see on the chart. And if you see on a chart like here that we are even in consolidation, but we are in a downtrend, so you can adjust your strategy here to, on the lower time frame, to just play the downtrend, which you found on the higher one. And you have to assume that it will be sold. So after first one, the second lower high, lower low. So we have something like a channel here, and you have to assume that you'd be safer shorting. The easiest indication is that the price action stays below 200 EMA. So whenever it bounced here, I would be shorting here, and I would be shorting somewhere here, probably trying to. And whenever the price got above 200 EMA and it started going down, I will be trying to long it, or any kind of EMA. So I think instead of trying to guess what the market will do, if you have your strategy and you are following, you said you have a defined strategy.
Not defined, that's the problem.
Okay, so let's define it, okay?
Yeah,
let's
please,
work on
give me something.
I will focus today. I will give you a simple strategy to follow in a trending markets. Okay, we'll start from a trending ones, and you can apply it on every time frame. But I'll show you how the strategy should be done. So the first thing, it needs to tell you where to entry. Okay, so everybody is hunting for entries. Everybody wants a golden strategy, golden grail, which will tell them to enter, when to enter a trade. We'll be using EMAs because I like EMAs pretty much, not only as a support to resistance levels, but they also give information about the market pretty well. The EMA is nothing more than the historical average calculated in a certain way of the price. So moving average basically means that the level it is in, it's a fair price for which all the users, all the market participants see as a fair price. To imagine the EMA, you have to buy something like, let's say, daily. And if you buy, I don't know what is the cost of the coffee in Starbucks right now, because I'm drinking at home my own. But let's say it's $10, okay? And it was not at the same price all the time. It was probably at $4, $5, and whatever. So if you go right now and you are used to the price of $10 per cup of coffee in Starbucks, and you go to Starbucks and see a coffee which is $9, you will see it as a bargain. But it will be a bargain in your short-term market memory, because one point of time in the past it was probably $5, so it's still more expensive, but you don't care because compared to what you are used to, it is cheaper. And this is moving average. And if the coffee in Starbucks continues to be at $9 and suddenly it will grow to $12, you will see it, okay, something's wrong. It's more expensive than I'm used to. My fair price moved to $9. I got used to it, and then the price is moving up. So something is wrong. The coffee is getting more expensive. And this is the short-term market memory. And we can talk in a short-term periods, longer-term periods, but this is something which is a part of the market psychology. Like, people get used to certain prices, and whenever the price gets above or below, they will see it as a bargain or as a really expensive. And that's why I like EMAs, because they give you this information, and they give you information about the price action, behavior and possibly possible trends. So I will be using only 3 EMAs for this strategy. I won't get it complicated. It has a clear entry signal. So whenever you have the price action above the 21 EMA, and the 21 EMA is above 55 EMA, and they are both in the same order above the 200 EMA, you will be entering longs. Whenever it is the opposite, like here, you would like to enter shorts. This strategy will work best for trending markets, but even in ranging markets, you can move to the lower time frame. So if you're trading 15 minutes and you see a bigger 15-minute range, you can still trade it on a 5-minute. It is not a perfect strategy. So let's be fair, it doesn't give you the biggest profit, but it's really easy to follow, and it gives you a picture how every strategy should be built. So with this strategy, whenever we have a correct order and all the EMAs are sloping to the upside, you want to enter long, okay? So first situation, our long will be here. Okay, so this is our first entry. And of course, whenever it happened, look at this price action. It looked like a sudden drop, and you may be fearful that the price will break. But this is what I'm talking about, supports and resistances and trends. Whenever the price is in trend, whenever it is at the resistance or on the support, you need to treat this support and the resistance as it will never break. Of course, it will break one time, but you need to be able to make a trade on the support or at the resistance, no matter what you feel about the market. And as you can see, we have stochastics going down here. So you may be fearful about it, but we'll be using only price action, and this strategy you can use only with price action and EMAs. You don't need other indicators. So this strategy is giving us a really clear entry signal, which is well defined. So whenever the price action touches the 221 EMA, if we have a correct order of them, we will be going long. So this is the first point of the strategy, really clear entry signal. And this is clear. So the next one, we want our risk management. So our risk management will be really easy with the strategy. And this risk management is also a trade management in terms of taking profit. So we'll be entering on 21 and we'll be exiting a trade whenever we have a close of the dildo below the 55. Our first initial stop loss should be a little below the 55, okay? So this will be our trade, and we leave our take profit open always. And what you want to, as you can see, it looks scary for a moment, and this is how the dildo looked until it closed. So that's why it's really pointless in looking at the dildo whenever it's forming.
I have a question.
Can you hear me?
Yeah.
My mic is breaking again.
Jackie, we enter the moment it touches, or we wait for the candle to close above it?
The moment it touches, you don't need a candle to close.
Okay.
Because you already have a setup with your strategy. So 21 is about 55, about 200, they're stopping to the upside. That's the signal. So you only need to place even limit order at 21 or a little above and just wait for yourself to close and just move it with the 21. You don't need to wait for dildo to close. You need to assume that it is a support, and everybody knows that EMA can act as a support, especially in trend. And if it is a support, it means that it will provide, most likely, a strong buy pressure, because people seeing the price above 21 EMA will see it as an expensive, as close as it gets. So let's imagine you were buying this coffee for $9 for a while, and it went to $12. So maybe coffee is not best example, but let's say you want to buy a coffee cheap. So whenever you see the price again closing to $9, you will probably buy a little more. Let's say you're buying coffee in bags, and then you want to buy a little more because it's getting back to the fair price. And this is the same whenever the price is below the EMA and the EMA is going down. So EMA with the direction is showing you that the price is still rising. It was rising, and you can expect it to continue to rise. So you want the best bargain, and you want to buy it as close as possible to the EMA. and we'll be using 21 EMA, but we can use also 69, 72, whatever, all the EMAs will work. We're just using the Fibonacci EMAs because they tend to work more often than the others, and 21 and 55 are. So so we're buying here, and we have a really clear, strict rule for here. We will only take out the trade whenever the candle closes below the 55. It's pretty simple strategy, and it has certain rules which you can write down on a piece of paper and just follow them. Of course, it's not the biggest winner in the market, and this is not the most brilliant strategy, but in trending markets, it works. And
You want the skills, you don't want the money right now.
what do you mean?
I said you want the skills. I want to learn the skills right now. I don't want to learn the big money making strategy.
Yeah, this strategy also is a strategy which will give you less correct entries than like strategies, but will give you an insanely high risk to reward ratio when market trends. So we probably spoke about it. If not, there are two types of the strategies. One will provide you a high strike ratio and really low risk to reward ratio, even lower than 1. And you can apply them. If you have 74%, 75% chances of winning, you can really apply risk to reward less than 1, and you will still be winning with the market. You can probably apply a risk to reward around 0.6, 0.7 to be still a winner. On the other hand, there are strategies which will require you to hold your trade longer. That will mean sometimes market will reverse on you and you will be taking a loss. But those strategies will provide you a significantly higher risk to reward ratio. An EMA strategy, it has more than 50% chances of winning, especially in a trend, but will provide you 2 to 1 at least risk to reward ratio on those bigger winners. Sometimes it will be 1 to 1, but an average is around 2.5, 3 to 1 risk to reward ratio. So it's up to your style. You can also like trade the EMA strategy on the higher time frames for a swing trading and still stick to the faster moving scalping strategy. But let's focus on because what I want to give you, Faisal, it's like an idea how to define a strategy, like to have strict rules. And I used to, and I still do sometimes, I am writing literally on a piece of paper my pre-flight checklist, what I want to see. So I want to define a setup, and we know the setup here will be price action above 21, 21 above 55, 55 above 200, and all of them sloping to the upside. Really clear rules. And I'm only using this strategy whenever I see this picture. So this will be for long, and for short will be opposite. Then risk management. Okay, so I know where to enter. I will be entering on the 21 EMA touch, and then we'll go with the rest. So this strategy is really for trending markets. We have clear definition of when to enter, of our entry, and our risk management. So this is the first part of defining a trade when you're trading spot. You need to have a really strict idea when you will be getting out of your trade, either with loss or with the profit. So you need to have something indicate you where to take this profit or where to take the loss. With this strategy, we will be exiting a trade, managing our trade only with the 55, and we'll be waiting for a dildo to close. And let's see how it works with the future. And you don't act on a chart, you don't care, you are only checking for a dildo to close, like here, below the 55. And here is your trade. And it's really simple way. Did it require any thinking what the price action will do? No, because you don't know what the price action will do. You have to assume that if you have a strategy with a general rules, you have to assume it will work. And if it doesn't work, it's not the fault of the strategy. It's not your fault. It's just a part of market being bitchy about it. And there is no strategy which have 100% chances of winning. absolutely no. Or you can play options and you can do magical things, but we're not focusing on options here. So this is basically how the trade should be shaped. And for using this strategy, you need to have a bias on the market, and you need to know whenever the market is consolidating or not. So we had a consolidation here on the lower time frames. And as soon as it broke the consolidation, you can start using this strategy, because whenever the consolidation is broken, market will probably trend for a while. And this is where you can start thinking about using such strategy. Is it simple for you, Faisal?
Yes, so we take all signals. That's what I need to know.
Yeah, you take all the signals. Of course, if
Okay.
you are in the position here, you don't need to add here. Okay?
Yes, yeah.
This is the different game. And also you want to take the strategy whenever the market is trending. So on 15 minutes, it was trending for a while, okay?
Yeah.
It was not a tough trend, but it was still money to be made with it. Also, I won't be taking, if I have a high here, it was defined on the hourly or even lower. Let's don't take weeks, okay? So I have a high here. So whenever I have a signal provided by the strategy below the resistance, which is a tough resistance because it's a local high on the more macro picture, and we can see we are still in this range. I won't be taking EMA trades near the resistance, because I have to assume that this resistance will never break. Even if it does, I have to assume that it will not. And if it does, I don't want to, I will not be blaming nobody for it. It is just one point of time, the support or resistance, every support and every resistance will be broken, but we don't know when it will happen. So you can't really think of it as it will happen. It is like a certain way of thinking, because it will ease up a lot of your pain of thinking what the market will do, if you are right or wrong. You don't need to be right or wrong about the direction, about the market. You just need to apply what you know about it. And what you know about the strategy is whenever you have a certain setup, you should take the chance, because it will probably provide you with a nice, decent winner. If it will not, that means that market wanted to play differently, and that's all. But you never know what the market will do. And let's go with the strategy again. I'm not going to short it here because I'm still above 200 EMA, and this 200 EMA is still going down, giving me an upside bias. And as you can see, we have a bullish setup again. So what I'm looking for here, I will be looking for this trade. So I'll be taking this trade whenever just reverse for a while. So I'm looking again for 21 EMA long, because we not only broke the range to the upside, and this level will act as a support, but also we have 21 EMA here, and I'm taking a trade here. Really easy for the soul, and you don't need to think.
But sorry,
yeah,
wouldn't you have been kicked out immediately?
No, because you don't need to have a fixed stop loss in this case. You just need to watch the next dildo, and you need to watch the market, and you are waiting for a candle to close. So you don't care whatever the candle will do. In the meantime, you are just waiting for its close. Whenever it's closed, it's time to decide if you want to leave the trade or not. So if it would close below, you would get out of this trade.
Mm-hmm.
Yeah, and the initial stop loss is under the 55, not the 200.
Yeah, I mean, you don't need this initial stop loss as long as you are at the chart at least for next 15-minute candle, and then you can place the stop loss here below this week.
Okay, got
okay?
it.
It is like you you don't need it at the beginning. Sometimes market will dump and you will take more loss, but let's consider this. You will be taking like 1 or 2% risk per this trade. So for markets to dump really, really low, this represents your like 1% risk, and you're judging it by the distance of the 21 and 55. So even if it dumps to 200, you will be taking only 2% risk or 2.5%. So it's still in the it's still within your it's still with your risk management. And then, as always, it didn't close below 55, even if it looked like. And on this deal, though, you are out of this trade. Okay, so it provided a loser. So you get me with this strategy.
It's easy to follow, strict.
Yes, and it's something to start from. It is not a golden strategy. It is not the best one, okay?
I understand. I used to trade something like that. I used to train on something like that. And I know it's work. If you follow it, it will work. I know that.
So for sure, you know that you have those simple rules. The other modification of the strategy, which I really like, and it represents more scalping. Like it's more scalping because it's faster. I use the 8 and 21 EMA, and I will be entering on the 8 and managing with 21. And it is good when you have a good uptrend and confirmed one like this one, and you can see that there will be your entries, and you will be managing it with the 21. So it works the same. It would work the same with the 69 and 100. Okay, it will just provide you less or more entries or less or more fuck ups. So I really like using this one for myself. And of course, there will be fuckery times like here because we broke the resistance and we retested back again into it. And there is no perfect strategy, but you can really use it. You can also use like 200 EMA, and I like using 200 EMA and 200 SMA for swing trading sometimes. Of course, it won't provide you with a multiple entries, but I'm using like whenever I have 200 EMA above 200 SMA, everything's sloping up, and they are in this order, I will be entering on 200 EMA. And the same in the opposite, whenever 200 SMA is above 200 EMA and the price is below them, I will be shorting it. Of course, with this strategy, I'm using then different take profit rules. I will be looking for measured moves or general horizontal supports and resistances to get out of this trade, but those tend to provide a good support. So you can play with EMAs, but really, this is the example of the perfect strategy when it comes to executing it. You don't need to feign. Somebody tested the 7 and 8 and 21 EMA strategy for me, and it provided around 60 to 65% winners. And the lowest winner was like 1-to-1. There were some trades with, let me tell you, I have the strict stats somewhere here. So it was giving an insanely high risk to reward ratio. Okay, so out of 100 trades, 15 trades were 2-1, 13 trades 3, 38 trades 4+, 15 trades 1.5, and 20 trades 1-to-1. It had around 60% of winning chance. Okay, and this is like this is the 10-21 strategy statistics. So you know somebody did work and backtested it for you, and you just need to trust it. And the best way whenever you have a new strategy, it is to go to the strategy and backtest it on you can do it on paper trading, on TradingView, just to not to feel the emotions, just to only test your ability to read the strategy properly. Whenever you feel confident in your execution, you should apply it on your account, but with really, really small risk, like 0.1% or something like this, 0.5%. Because then you want to train yourself in executing this strategy when you have and emotional conditions, because then you are risking the true money, not the paper money, not the statistics. Okay. And when you feel like ready, you can increase your risk over time, and this should start giving you results. So this is the one strategy, really easy to follow. And in general, when you're starting trading, and even if you're trading, I try to stick the most simple strategies, because they give me the most clear reading out of all. And I would really, when you are trying to find a new strategy, it should be really, really simple. And it should really have really precise criteria when to enter or not. The other way to trade, you can do it by horizontal. So I like using fibs. Let's remove the EMAs for now, and just trade the zones out of the fibs. And those trades should be around like 1-to-1, 1.5-to-1 risk to reward ratio. And there is one easy formula which I'm using in my Voodoo also. You will be waiting for a dildo to close above support or resistance to buy it, or you will be looking for a test, and you will be expecting to buy it, and trading really zone by zone, those smaller zones.
Yeah, that's what I was using last week.
So it basically, this strategy and this way of trading, you assume that the support or resistance will never break. That's why buying them or selling them, you will be doing it instantly. And sometimes it will mean you will get wrecked. So there will be like trades like this, even if you want to counter trade the trend somewhere here, and you want to play this trade, I would be using, oh, it's so good, 1.5. I'm using 1.5. I'm using like fixed one on this. This is like my Voodoo strategy. But Voodoo is making the fibs for you. You can make your own fibs. So even if you're blindly buying and making 1.5-to-1 trade, this one would be a winner. This one, if you want to trade it to the upside and you're wrong about the bias, would be a loser. But then you know, because you were kicked out, that you want to be trading to the other side, or you want to treat it as a resistance. And because you have tested it and it was still holding, so next time the price gets here, you want to short it to the downside. And the same with the range. You may want to short this after this break. You may want to short this to the downside. You would get wrecked with this trade, but that means that this support holds, and next time it comes into it, you want to long it to the next support or resistance. This is really simple strategy. You don't even need to follow the trend. Of course, having the trend as your friend would be a good idea. So whenever you have 200 EMA and price below the 200 EMA, you can expect at least short-term trend being to the downside. So you want rather, instead of longing, especially in the upper half of the range, you want rather to be finding shorts. As soon as it gets to the bottom of the range, near the bottom, you can be thinking about the change of behavior. So what we had here, we had short-term downtrend. Price was having a sell pressure. There was a short to be made somewhere here, and you would be still shorting here, and only doing it by the supports and resistances. So those small clusters, those trades will be 1.5 risk to reward ratio. And then we got price into the next small term range. And you can see as it matures, sometimes if you don't know where you are with the market, and if you don't know what the market is doing, and you can't identify a trade, a trend, or a range, it's better just to sit back and wait for the market to paint a beautiful picture. So if you see a price action like this and you are confused, and you don't know what the market will do, it looks shitty, you don't know, it looks like up, but now it doesn't, just wait a moment. You can just mark the swing highs, swings lows, even on the small time frame, and wait for the market to show you a way. Right now, it still looks like bullshit. So if you have this picture here and you don't know what to do, just do nothing. If you are lost, accept it that you are lost and your skills don't work in current market conditions, and just wait for the market and patiently wait to give you a picture and to show you the way around. And as soon as you can see, it will behave. And when you see this level broken to the upside, you can expect, okay, we were in some kind of a consolidation here. Now I can draw the diagonal or whatever just to define a pattern, and I will move this line to those swing highs. And now I can see clear it was some kind of a triangle. And what I want to do, as soon as it broke here, what I want to do, I would probably like to long it here on the retest. Why not? This is my concept. Like, I want to try this new idea. So I know that those patterns tend to, whenever they are broken, they like to play a measure move. And this will be my take profit. So I take a measure move and I place it here. And I already know, okay, so my take profit would be here. My stop loss would be below the bottom of the, below the bottom support. So, okay, it's 164 to 1. It's worth taking a risk. And I will take it, just buy it. And if the price action went against me here, where are my drawing tools? If it went down and broke to the downside, then of course I would take a loss. I would say, okay, I was wrong. It broke to the downside. It's time to short the resistance and take the measure move trade to the downside. So this is the way of thinking. Strategy is not to provide to give you for you to be right or wrong. It just have a certain probability of market behaving a certain way when you are using the strategy, and it will give you certain limits, certain results. And there are strategies like EMAs, there are strategies like horizontals. You can use the every knowledge you learned from Eric in his TA program to shape your own strategy. But it is like not really, when I'm applying my strategy, and this is Faisal also for you, you were like arguing, so it is like automated trading, and then it's like subjective trading. So I will always think about what the market is doing, has been doing for a while, and what it can mean. Okay, I will assume that this type of a range, when it gets broken on the retest, it's worth buying. But I will execute the trade automatically. So I will place my entry here. I will place my stop loss below this formation, and I will play the measure move. So those are those strict rules which you want to follow. And even if it went above your take profit, it looked like, okay, maybe I took a profit too early. And many people make a mistake. They want to re-enter somewhere here, or want to rejoin the movement because they see it as it is highly bullish, and they will miss the opportunity of unbelievable profits. Because this picture, if you see it like solely without any context, it looks fucking bullish, doesn't it?
Yeah.
Yeah. Okay. But you have taken your chance, you have taken your setup, and your job is to make money on the market, not to be in the market all the time. And let's see what the market did. Okay, it bounced, it went up. That's okay. But it started ranging, and then it came down. So it looked bullish. It turned out not to be bullish. This is strange. But if you were like thinking in the strict terms of taking profit, where you have a signal or you have your take profit set, and just doing it emotionless, not thinking about whatever the market will do afterwards, whatever it can do, you'll be a happy man because they will accumulate in your account over time. And then you look for the other setup. And this is the example, Skipper, for the subjective trading, as you called it, okay? So I'm looking what the market is doing. I'm trying to find what it did, and I will play it if I have chances. There are some times in the market I will not be playing it because I won't be able to see the overall picture, and it will bring me only losses. So I will stop from playing it. And if you seek for a really fast scalping strategy, which has already proven its results, you can always stick to the matrix and the video I posted, okay? And it is also really well defined because what you're looking for confluence of the oscillators and the price being on the support or at the resistance, and then trading accordingly and accordingly to the bias. But bias should not come from your expectations, whatever the market will do. Bias is not the thing, okay, I think BTC will go down to $1,200 because I think so, I feel so, and I feel it in my guts. This is not bias, this is bullshit. The bias is based on a general market behavior and interpretation of it. And my bias on BTC was based about breaking the trend to the downside. And I was saying a consolidation, and then I would be thinking on the retest of the last support, which was not retested. And whenever the price trends to the upside or to the downside, like here, the price sooner or later treats those violent trends more like a gap in the market because the price didn't make any supports and resistances on the way. So whenever you have a really, really tough uptrend, like here, and not really much support or resistance up there, you may think that the price will try to retest them to prove if they are truly a support or resistance, or it was just a emotional people buying the market and it didn't have any support in the participants, or just pump and dump, like people like to call it. So this is bias. Bias can be really easy made, and I think this is like the first thing I'm looking at. It will be 200 EMA, and I will be looking at it if the price action is above it and if it is sloping to the upside. And this is the easiest bias checker. So if you don't know how to be biased, check where you are with the price, if you are above 200 EMA or below it, and if it's sloping up or down. And you can see here we are going up, and as long as the price action is above 200 EMA, I will be treating it as a bullish. The other way to check the bias, you can make any kind of the support based on the price action. And let's put like resistance here. Let's put the support here. Oh, it didn't work, okay. So I assume we are in some kind of range. I can move the support even lower. Yeah, somewhere here. And what is my bias checker here? Right now I can see the price is in range. It is either up or below the 200 EMA. It cannot decide. We have a local high, we have a local low here. And how I will check my bias, I want the breakout and the successful retest, and I will be trading it to the downside. Then I will change my bias to the downside. Also, I want the price action below 200 EMA. If it breaks to the upside, I will wait for the price to either retest this support, or I will start using the EMA strategy and will try trading it to the upside with the strategy. But my bias comes straight from the market behavior in the past. You are so silent, guys. Come on.
We're focused.
Yeah, I know. I try to be too. I'm going to my cottage today.
I'm trying not to talk too much because, you know, driving and now on petrol station, so it's loud. Eh?
Yeah. I can hear your wife sometimes. Yeah. Slow down.
I have a question, Jackie.
Yeah, go on.
I don't know. Could I share my screen?
Yes, you can share your screen. Just let me stop sharing my.
It's the first time
chat.
I'm doing it. Let's see how it works. Okay, it will be only one window, right?
Yeah.
Yeah.
I can see your mouse here.
Okay, perfect. So this morning, at some point, I decided this is a range.
Okay.
I marked it with these two blue boxes, and I wanted to theoretically sell the upper blue box and buy the lower one.
Okay.
This was a bad trade. I didn't respect my own checklist. So I am here. Okay.
Okay.
Yeah. Okay. So I am looking on the 15 minutes. I want to trade the 15 minutes and time it with the 5 minutes also. And so let's see what happened. All right. Now the white line turns down. I want it in the critical zone. I had at this point, I was planning a trade like this. Enter around here, let's say, in the blue box, and with a stop loss below the blue box, and with a take profit, I put it like this, but I was going to exit if at the moment I was thinking I'm going to exit when the white line goes to the critical zone in the upper side. So I was hit here, and I was doing this on my free window screen with 5 minutes, 15 minutes, 1 hour. Okay, so it goes here, and it does this. Okay, I exited it. Looking on the 5 minutes, I exited it something like this because the 5 minutes was in the critical upper zone, and my thought process was, okay, if the 5 minutes is in the critical zone and we went up just this, I'll just close this in profit, and on the 5 minutes I'll enter again because probably we will go back again here. And it did this. So if I left the trade, it would have been a loser.
Yeah. Normally, if I made a trade like this, but I wouldn't, and will explain you why. I wouldn't. I would take a loss here. I mean, I would be down like 1% in my account.
Yeah.
So leave your screen just like this. Tell me, what can you see on this picture whenever you decided to trade it to the upside? First thing, just if you can stop moving and and I will show. Can you like minimize the indicators with this triangle? I will
minimize all the indicators.
No. Just give me a second.
But it's a downtrend. Why did you long it?
Yeah, just give me a second. Come on, it's no judge zone. Don't worry. Annotate. Okay.
It's under the eye.
Can you click here, Roddy? You can see it. You can see me drawing on the screen.
Yeah.
Okay. Can you click here? That's really nice. Clear my drawings. Okay. So what can you see? You were right about the range.
Let me respond fast to the question. I decided to long here because I decided to play this as a range.
Okay.
I thought it's Friday is going to be a boring market, and I wanted to...
I mean, Fridays are not boring. I stay away from trading on Fridays most of the time because they can be full of shit.
This was around,
Basically,
I started looking at the chart at 5 in the morning, so...
That's like me today. Listen, first of all, you came from the upside, okay? So you broke some kind of the resistance, okay? So you had a downwards pressure. Then you were in the range. That's okay, more or less. But look at the 200 EMA. It's going down. Okay, sorry for my drawings. They're not the best. Here you have the 200 EMA. Okay, and it is in bearish setup. And the price action is below the 200 EMA and it's stopping down. So you should stop thinking about longing it.
Yeah, I didn't think about this.
Okay. Also, if you switch to macro,
I didn't follow one of my scalping rules. usually when I scalp with this, I am looking at the 1 hour, and I think 1 hour was pointing up, I think, if I remember correctly.
Yeah, but you can, I want to see the hourly. I can see your, okay, so I will share mine, okay, if you don't.
Yeah, I don't
You have
mind.
an alert.
Yeah, I have my alerts when the white line on the 5 minutes and 15 minutes go to the critical zone.
Okay. Yeah, I will stop you from sharing. I can do it. I have special powers. So it was here.
Yeah.
Okay, so the price was still below 200 EMA, and it was going down. And it was a small range within the bigger range. And it is like the fuckery zone here. Because if you want to do something, you should be rather shorting it to the bottom of the formation. And we can see some kind of the triangle-ish formation finally on hourly. Yeah, we can do it. We can do it. So we can see, we can make a picture. It can break both ways, basically, because you have certain chances of breaking to the upside. They are higher than breaking to the downside after the uptrend. But in general, if you want to trade it somewhere here, long it, it's better to short the 200 EMA to the bottom of the range. Or just stay away from the market, which is the best way you can do, and wait for the resolution of the range. If you are not at the support or at the resistance, it is like most likely no trade zone, or you want to just scalp, but it is highly dangerous sometimes. Also, you need to think in the macro picture, because you were in the uptrend and you have consolidation here. The biggest probabilities will be if you treat it as the reaccumulation and that it will break to the upside. So you need to think, okay, I'm in this consolidation here. Do I want to short here? Maybe not. I will wait for the retest somewhere here and I will long it to the top of the range and I will just play it. You get me? Yeah. It is the way of thinking which will save you from many painful experiences sometimes. Does it mean it will not break to the downside? No, it can do it. I've seen worse things. So you can see always going to the macro. And with the macro, like 4 hour, we'll treat as a macro. Price action is still above 200 EMA, and we need to treat it as still bullish. So always when you are making a picture, and this is always good, even if you want to scalp whole week, it is really good and safe to prepare some kind of a picture for the market. What it is doing right now, how to position yourself, make your own bias based on the analysis of the market. Really simple one, just horizontals. You can use EMAs and just see what the market is doing. If it's in the uptrend, if it's in the downtrend, if it's in a range, and just act accordingly. So if you see the market ranging here, you can scalp the lower time frames, but I would be sticking to the certain direction on them. And right now, I would probably be thinking about, if I'm doing like 5 minutes and scalping 5 minutes, I would be thinking most likely in the long position, because the price action is above 200 EMA again, and 200 is soaking to the upside. But then looking at 15 minutes, it is still not broken, and hourly, it is still not broken. So I want to stay away from it until it just goes. And market will be harder and harder closer to the more the formation will mature, more the range will mature. And this is why taking trades in the uptrend on the third or fourth retest of the support of the trend, sometimes it's not worth a while. Sometimes it's better to wait a little and to get more clear entry. Of course, you can have an uptrend really, or downtrends like here. It was technically a downtrend. Here for 2 years almost, like 1.5 year downtrend on the Euro USD. And thanks to the virus, finally Euro is getting some value against USD. So it doesn't mean Euro has a value. So we had a downtrend for 2 years almost. Yeah, and it was multiple retests. And if you see macro like this, you even want yourself to be thinking about selecting the most juicy zones for you to trade off, and sometimes to stop trading the lower time frames. And if you are scalping in the middle of the range, you need to pay an attention where the price action is. If it's in this small, so in general, if it's a downtrend, you're better shorting than longing. It's not only from the probabilities, but you can also see that you will have higher reward shorting the downtrend than longing one. It will be less movement if it's in a downtrend. Then if it's in a downtrend, you want to be thinking in the way, if it's in a downtrend, all the movements to the upside, all pullbacks are easy to be sold. And I don't want to be in a position that I will be in a long and it will be like I will be wrecked by the dildo of death. So if it's in a downtrend, you want to be rather even scalping, rather thinking about finding entries for short on scalping than long ones. And even with this downtrend made on daily, on lower time frames, if you are stubborn, you can find really short-term uptrends, and you can find them on lower time frames, on 15 minutes also, on 5 minutes also, and then you can position yourself accordingly. Just a rule of thumb will be, whenever you are like trading 15 minutes, you want to look at least for hourly where you are, if you're downtrending, uptrending, or consolidating, and then you want to apply this roadmap to your trading when you are scalping, just to be safer. I know those trades will last only like 1 or 2 hours the most, but it is a better idea. So as you can see, it's really, you can set yourself a really simple, make yourself a really simple set of rules, which will include really simple indications of what the price action is doing. And if I'm in a downtrend, I'm not thinking on longing it. I'm just stopping thinking on longing it. And if it's and how can I define if I'm in a downtrend or the uptrend? I already showed you guys, and this is the simplest way, and it works as the other methods, and it's not complicated. You just need to really work on seeing the market structure, and it's not about trying to find out what it will do. You need to know what it did before. So if you are in consolidation after the uptrend, you have to think that this consolidation most likely will break to the upside. You can be always wrong and it will break to the downside, but that only means that the market did what it wanted to do, but you were putting your odds in your favor by trying to go to the upside. So the probability is really a bitch, because it doesn't mean anything for sure. If you have 99% probability of winning, you can still have a streak of 100 losers in a row if you are really if you have really bad luck. It is a probability. It means that based on the previous observations, whenever such situation happened, it worked most likely, most of the time it worked this way. But there are also examples of this situation resolving in the other way. And you can do nothing about it. You can just apply your edge every time. And so people are bullish, let's say on BTC, we're bullish. If they are right, I don't know. They are the same. For myself, it's the same as being bearish on it, because we are consolidating and we need to see where it will go. And we didn't break a consolidation yet. And you can absolutely say nothing about it. Only you can say that it's getting matured. So most of the time when the consolidation is getting mature, if it is in this 30% zone before the end, it likes to break out. This is what you know. But will it break out? Maybe not. Maybe it will stay in the range and do some fake outs and do a next triangle, do a measure move to the upside like here. So it will move a measure move to the upside, come back to the range and stay in this range, then probably fuck down. And you can make as many as you want scenarios about the future. And the funniest thing out of it is none of them may work because it's the future and nobody knows it. So the easiest way is to really pay an attention first to the trend. Whatever time frame you are trading, if you're trading 5 minutes, look at the trend on 5 and 15 minutes and see what the price action was doing, what it's doing right now, and then think accordingly. So if I am in a trend, I probably won't be scalping it, because if I'm in a trend, I'd rather use the trending strategy, which has higher risk to reward ratio. If I'm in consolidation, that means the price is more erratic inside the range. I will probably try to scalp really small ranges on really small time frame and just make my money out of it. So you can see the general bias, the subjective way of perceiving the market is only telling you what type of the behavior, what type of the strategy you should apply. But at the end of the day, it's like Alex suggested on the Discord, he wrote me. So creating an auto trading, a trading bot, okay? It is like acting like a bot, but the problem with bots, if you are not too sophisticated, you don't have money and the power of people behind you with a knowledge, is that it's really hard to make a bot which will work automatically. So you may switch on the trending bot whenever you detect a trend and it will trade for you. And whenever you are in the range, you want to switch to the scalping bot. And it still is done this way. But being a trader is pulling a trigger based on a certain situation. And you are like a soldier, and your way and only way to make money is not to overthink the market, but to just pull a trigger, make your trades, and try to make money with it. And I'm really, it's really funny, and I'm laughing sometimes. I'm seeing guys like on some Discords, and they are trying to build a whole story about the price action and trying to find new revelations about it, like certain like this ribbons or whatever it is, signals. They worked in the past, and BTC is in the same, and it will do the certain thing. And I'm trying to find a deeper sense in the market. And I can tell you that market has absolutely no sense at all. It is totally random from your point of view, because you never know if tomorrow or today in a minute somebody will not press the sell market button with the really huge amount because he just made a mistake, because he just pressed the wrong button. It doesn't need to have sense to move the price. It requires only one person in the world to move the price at any given moment in time. You know it from Mark Douglas, and I truly agree to it. So market has no sense. And the only way to make money with the market is to use the TA principles, or if you are trading fundamentals, you can trade fundamentals, or you can connect both of them, but using simple approach to what already happened and play your probabilities. That's only a probability. And nobody knows if BTC in next 5 minutes will not pump to 10,000. We've seen it. We don't know if this range will not break in the next 1 hour or two, or even right now. If this 4-hour dildo 5 minutes before close will not dump to 200 EMA. I've seen it. You probably too. It can happen almost instantly every given moment of time, because somebody wants to do it and will do, and it impacts all the picture. Of course, this sell can be really bought up because there will be many people interested in buying here, and we will have only a wick down to the 200 EMA, but you never know what will happen. You may see one person doing this shit and the rest will follow him, because they will think, okay, it breaks down. They will hunt for the measure move and the price will reverse without any reason, like in half of the move, and come back to the range, because the market can do. But the strategy itself and the approach overall to the market is to just work on the signals given by your edge, and don't think what it will have, what it will do. And if you know for sure, I don't know for sure, I don't have statistics about it, but let's say let's say the 12-hour time frame stochastics are whenever they cross in the critical zone and they start sloping to the upside, are giving a strong buy signal. And if you have data which will prove it that most of the time, more than 50%, it works perfectly as a signal, then you can use it. And what you need to do in the future, if you know for sure that it is working more than 50% times and setups taken by the price being on the support and the stochastics bouncing out of the support, giving the signal, are giving you certain probability of winning, only thing you need to do next time, whenever you see something like this, just to act on it. And don't care, you should not care whatever, if you are right this time, if it looks right, maybe it's a little closer, maybe it's a little lower or not. The signal is the fucking signal. Either you take it or not. If you don't take it, you can be safe and not make money or lose money. But it's no point in discussing the signal with the strategy, because whenever you made a strategy or somebody made a strategy and backtested it, he made it for the certain thing. It is making money in the market, and the strategy is providing signals. And your job is not to think about if the signal is right or not this time, because the only way for you to find out is just to place a fucking trade and see with your own eyes and your own wallet if it works. If you are afraid and you see this signal, okay, you are confused about this signal, okay, place a paper trade on the trading view and don't move your money in. Don't play with your money. Just see if you would be right taking this signal. And this is how, Faisal, you will build your confidence over the edge. Like if you are applying it and you sometimes can feel a little overwhelmed because you don't have a clear signal, try finding it as clear as possible and place a paper trade instead of your own money if you are hesitating, but still make an action of analyzing this situation. Because if you were right first, second, and third time, it's worth thinking that, okay, maybe this thing is showing me correctly and next time I should do it and risk my money. Does it sound good for you guys?
Yeah.
I wonder what happened to Gabriel. Is it okay?
Yeah, it
Do you like it?
sounds logical. And I'm pretty sure I won't have any problem acting on it, but we will see next week. I want to try this. I want to try finding something like you said, the moving average strategy. I will just look at those lines and follow them.
Okay, guys, so that's all for today, okay? During the weekend, try not to trade any crypto because it's worthless. Relax yourself. We'll see each other on Monday. That's okay?
Yeah.
Okay,
Cheers.
I'm heading to my cottage really soon.
Have a nice
okay, guys.
weekend. With
Yeah,
cold.
you too, guys.
Yeah.
Come on, bro. It's 30 degrees right now here or something like this. I'm
Oh, guys.
sweating like a pig.
Yeah.
It's 23, dude.
Take a
My
cold
home.
beer. Take a cold beer, man.
I will when I get
Cheers.
there.
Take care.
Okay.
Bye bye.
Take care. Bye.